Hey, good morning. It's Kim Krompass from the Price Action Traders Institute with another short trading tip video. Today the markets moved really fast and really well. It is, I should say, still Tuesday, January 31st, the last day of the month. And you can see that it's just 15 minutes after 9 in the morning here. Today the markets moved so quickly and so efficiently right out of the gate that many of us were done. Some of us were done in a short time as half hour, and others over just a little bit over an hour, like myself, as I press trades. So today I want to talk about a setup that we see over and over, but I also want to remind everyone that without follow through on any setup that you have as a trader, you can't make money. So if the market doesn't move, it doesn't mean the setup's not good. It doesn't mean the criteria is not good. It just means that the market hasn't moved. So let's go ahead and take a look at the dollar yen. That's what I want to talk about today. All right, so what you're looking at is a live chart of the dollar yen. And this morning in the trade planning session, we go through and devise our trade plan for each one of the 10 pairs we look at. And the questions that the trade plan is based on are very simple. There's 3 of them, only 3. The first question is, what did price do overnight? The next question is, where is price now? And the last one is, what do I need to see price do in order to execute a trade? It's very simple. Not easy, but simple. So when we took a look at the dollar yen this morning, and this is where we were looking at, it was right in here. We made the determination that the price action was ranging. There was really no movement either up or down. There was not what we call a clear directional move. And that line's not drawn too well. So there's the real line. Let's go ahead and get rid of that real quick, this other line. All right, so we had this ranging, and the trade plan that I had was no trades inside of here, guys. If price breaks through the lows, we want to get short. If price comes up and busts through the highs, we want to take a long. Either side, we don't care. We don't have a bias when we come into the market. We only have a natural bias once we execute a trade. It's kind of a forced bias, like I like to say. So, as you can see, this trade right here broke this low of this range right here. And so I want to talk about specifically the trade that I managed on this and what happened with that trade. So let's go ahead and take a look. So if you remember from our first view of the market, I said we were doing the trade planning session right in here, and no trades inside of here. Look for a break to the upside, to get long this pair, or look for it to break through the lows. It broke through the lows, and if you can't see this green line, here it is, the sell line that I took the trade, and this red line, if you can see that, is right here using a 10 pip stop. So on the dollar yen, I use a 10 pip stop. It's pretty tight. So we got the range breakout, and we got, most importantly, a close outside of the range, which we like to see. And I was targeting down here at the 20 level. Now let me show you the next screenshot, which will show you how I managed this trade. So now we've got 2 more candles since the big range breakout right here. Remember, the breakout was right here. Here's the breakout, the sell line. And now I've moved my stop line down to here to lock in 20 pips. So I've locked in 20 pips between here and here in case the trade turns around on me. I want to come out with at least 20 pips. And still looking for further downside movement, looking for price to come down into 20. So here's the final screenshot of the trade. I sold the break here at 113.158, right as it came through the lowest point of the low. And you can hardly see it, but here was my stop that I had moved right in here, tucked in here for plus 20. And I never really had a chance to pull that stop down. The market started moving so fast and was heading into my take profit level. And you can see how price, boom, hit the take profit level at 112.20 for 95 pips. And it immediately turned around and reversed. So it reversed about 70 pips off these lows. So this is what we like to do. We like to take range breakouts. They're not always a winner, but when they are, and when the market's moving across the board like it was this morning in several pairs all at the same time, there's a good chance that you're going to get a lot of momentum on the trade, and you're going to go ahead and be able to capitalize on it by trading between levels. And there's a couple different price levels in between here. Obviously, traders could have gotten out at 00. Traders could have gotten out at 80. Traders could have gotten out at 50. And there's multiple ways that we want to do that as depending on our skill set level. So that's a trade plus 95 pips, really simple to execute and simple to manage once you learn how to trade between levels. All right, I hope this helps you in your trading going forward. It's Kim Krompass from the Price Action Traders Institute, and thank you for listening.